And today I'm going to do it slightly differently. The trade of the day within the gold sector is Harmony. How are you going to play it? Long or short?
My instinct here is the important one because it's my money, right? So
yes,
what we do coming out of this show is we go and trade this view we have, a trade of the day, in our account, the Hot Stocks account, which is a real account held at our sponsor, Global Trader. So I'm not going along any of these gold companies because I think they're all vulnerable because of the rand and the gold price. Personal view. I know that, you know, there's a different quality grade from the Anglo Gold, you know, highest margins, all of that, all the way down to the smaller one. Harmony's kind of in the middle there, and we sort of agreed beforehand that that's the one that Ian would least like to own. So I'm stretching him here and saying that's the one we're going to go short.
I'm going to have to do a survey of all our guests and see what bulling tactics you are actually using, because I see this is a trend coming through. Are you happy with the trade?
Short term, yes. It's at the bottom of a trading range, and this makes it suspect, it makes it vulnerable, and so I'd be very careful about it. But I wouldn't want to short it now. I would say if it breaks the base, and it's only a few rands away from that it's been to recently, it's going to fall quite considerably. So potential for a nasty bear trap there, a bear move.
All right, I'm a little confused because Ian is saying he wouldn't short it right now. You're going to go short, aren't you?
Well, we have to do the trade this afternoon, so there's no way to hide. We just have to take our chances. But you know what we're going to do, I think, is the same thing we did with our Anglo Plat short.
Which bit you hard.
Which worked so badly that we got blown out of the position after 2 days.
Who tries and shorts Anglo Plat at 365
rand? You put
an
automatic stop loss on it. That's the way the system works. So we'll do the same here. In other words,
explain that.
Well, what happens is we go short, so we sell them in anticipation of it going lower. But if it starts to go up, which then means we start to realize losses on the position, then we have an absolute level at which we automatically get put out of the trade. The real reason is that with short positions, your losses are potentially unlimited because the price could just keep going higher. So it's kind of a trading discipline issue, and we'll exit the position, for example, if this thing hits, I don't know, 85 or something. So any sign of good news for them or weakness in the rand or strength in the gold price, well, then we'll realize we made a terrible mistake and we must get out of that thing.
You said that there is potentially risk to the downside here.
Yes, but it must break out of this band that it's been in recently. That's why I don't think it's the right time. But if you have to do something, well, take some initiative, but have a very short stop on it.
Well, at least you are doing something, Paul. We've got to say that you are putting your money where your mouth is.
Now, normally I would be uncomfortable with the idea of a long-dated long on a stock that I don't have real conviction for. So that's the reason, in part, for wanting to do this.
Is that you just don't like the gold story?
I suppose in future shows what we could also do is try and be a little bit more sophisticated and look at the things to do with, you know, the gold ETF and the thing which allows you just to own the gold price or the gold price without the rand. You know, there are some trading instruments in that space. But for the moment, we're going with the hot or not theme with regard to stocks.
And we're hoping that down the line you are going to become a little bit more sophisticated.